Hello traders and welcome to another video review. Today is Monday, September 25th, 2023. Let's find out what is going on the Forex economic calendar for today. As you can see, there isn't any very important data release. Nevertheless, we still have some data from the Germany, for example. German business expectations, German current assessment and business climate index, so IFO data, are all scheduled for release at 10 o'clock. Then we got, of course, the ECB speakers on the wires. ECB Schnabel will give a speech, and the ECB President Christine Lagarde will give a speech as well, so please watch out for the remarks from these two officials. And that's it. This is the Monday, 25th of the September, on the financial markets, most important events for you guys. So let's just switch to the technical part and let's take a look what is going on the majors on the Forex market. We're going to start with the euro dollar, so let me just guys remind you what we are looking for on the euro chart. So if we switch to daily, because it will be visible clearly, if we switch to daily, we got this head and shoulders pattern, and we've been talking about it for quite some time right now, and it's still getting developed. So we got the left shoulder and it's working as a charm. We got the head and the neck is here, and that's the right shoulder. So from that situation here, there you go, 1.0616, we developed, of course, the very nice head and shoulders pattern. Let me just move it. There you go. And we got the test of the neckline and it fade. So where is the target? Let me just remind you guys, where is the target for the projected head and shoulders pattern? So let's just do like this. We will take the price range from the top of the head to the neck breakout. Okay, so this is our range. We will copy this and we will do that. Okay, and as far as I can see, with that very simple projection, the target is roughly around 1.0560. So the black one is the target. All right, the black one is the target. The recent low was made at the level of 1.0618, 1.0616. So we are only this is 58 pips away from the target. Now, if you consider these two lows here, we can of course put our lines here, because those lines will indicate the technical support, right? So we got 0.517 is a technical support. So we have a pretty much a solid zone here for all of the bears. And now this level 1.0649 is the technical now resistance. Kind of there wasn't any kind of a daily time frame candle close below this level, so we're still waiting for the candle close. If it is, then of course the target is, the first one is projected target from the head and shoulders, and the other one is the horizontal support at 1.0517. so this is how the euro and dollar daily time frame chart looks like. It's valid for this week, and we will stick to our scenario of euro dollar going lower. So let's now just switch to British pound. So daily time frame chart of the British pound. What do we have here? The first thing that everyone see is the technical resistance. So the technical resistance is around 1.2307, and it was violated, and we got the 1 and 2. So we got two candles close below this level. That's a very important situation, because it means that the bearish pressure is still visible. However, you can clearly see we are trading inside the extremely oversold market conditions. 22 points on the daily RSI tells us that it might be a time for a slight bounce. Nevertheless, the other target for the bulls, for the bears, is 1.13 1.2009, and the last one, of course, which is the key technical support, is 1.1102 as well. So for now, we are just heading lower. Please pay attention to extremely oversold market conditions. There is a cross. There is a bearish cross on this market, which means that this market is still under the let's say bearish control, right? Bears control this market clearly. There is a cross. So right now, what we should expect: slight bounce, but the market should not go above the level of 50, which will be somewhere around this level here, 1.2547, and then reverse lower again, because this movement to the downside has not been finished yet. Okay, so the outlook for the British pound still remains bearish. Still, this market is still under the bearish influence, and the bearish pressure is still high. That was the British pound. Let's take a look at the majors, which is the US dollar to the Japanese yen. And now this market, as you can see, is clearly moving higher. The target for this market is located at 150, so we can place our target somewhere here. 150 is a nice round number, which is why it's been chosen to be the target for this market. In the background, we have the uptrend. It's obvious for everyone that this is the uptrend, and recently we even made a bullish sandwich. Momentum is still strong. Momentum is still roughly around the level of 60. We keep making higher highs. We keep making higher lows. There is no doubt about it. This market is right now going higher. The key technical supports are located far away from the current levels. The first one is, of course, the old swing high, 145.08. This is the technical support, but there is plenty of them. For example, the last one here will be located at 147.88, and it will act as a technical support as well. But on this chart, I would like to show you something special, which I showed you guys before. We might be right now doing some sort of the quite extended but still possible ending diagonal. Okay, so maybe not from this low, maybe from that low. Nevertheless, it's still possible for this market to do the ending diagonal and then, of course, correct a little bit to the downside. So that's the scenario for the US dollar to Japanese yen. The other market we are going to take a look at is the US dollar to the Canadian dollar. And in this situation, that's something completely different. We got the technical resistance located after the 1.3693 level was hit. We got, of course, another level here, which means that this is the zone, the supply zone. The other technical support was located here, and it works as a charm, 1.33.86. That's the other technical support tested. The market bounced a little bit from this level towards the 50 periods moving average, right? So right now this market is located just in between 50 and 100 periods moving average. So we might expect some sort of the another test of this technical support, mostly because the momentum is negative. The momentum is below the level of 50, and any sign of the weakness will be treated as the bearish continuation possibility. So I guess that the best position for the best level for the technical resistance is at 1.3541. So this is the 1.352241. somewhere around this level there is the bearish divergence, sorry, bearish level, technical resistance. Bearish divergence was made here. For now there is no divergence on this market. Nevertheless, we are still locked between 150 periods moving average. As you can see, bulls are defending the lows around this technical support. Nevertheless, bearish pressure is getting much more visible these days. So for the daily time frame chart, we are looking for the clear red candle that rejects the key technical short-term technical resistance, and then of course the extension to the downside. So it is rather possible that we see this kind of extension because of the negative momentum. If we speak about the trend lines, there is a trend line here, quite good, quite well positioned, first, second and the third bounce from this trend line. So any violation of the trend line would be considered bearish as well on the US dollar to the Canadian dollar. So that was the quick recap of the majors on the beginning of the new trading week. Thank you very much for watching this analysis, and I hope I will see you guys tomorrow. For now, take care and bye bye.